For a long time, financial services providers have struggled to grow penetration of financial services in this market. Now, with the coming of fintech and other innovations, more of these are embracing these innovations to try and grow the penetration of financial services in this market. How they're doing it and the benefits that are coming with this are the focus of this segment. Even with the existence of an agriculture credit facility supported by the government of Uganda and commercial banks, lending to the agriculture sector remains small. According to the central bank, the lending facility is meant to provide medium to long-term loans to projects engaged in agriculture and agro-processing on more favorable terms than those usually available in the financial institutions. To most farmers, especially youths, who form a bulk of the 73% labor force situated in Uganda's agrarian economy, access to the facility is almost impossible, normally made hard on one hand by low access to financial services and lack of the requisite access requirements often demanded by lenders, and on the other hand, the risk averseness of the banking industry towards lending for agriculture. Now, pressed hard to break into new market segments and grow penetrations, banking are rethinking the market expansion model with a keen interest focusing on agribusiness, an area where a majority of the country's 40 million people are living.
Today we're launching our partnership with Goal and Dynamic to focus and enhance access to financial services for the youth in Uganda, in Northern Uganda specifically, and with a clear focus on agriculture.
And this is for us a really important development as we engage with youth. Our dynamic program is targeting 126,000 out-of-school youth across northern Uganda in 9 districts, and one of the biggest challenges is access to finance.
Besides this kind of partnerships, the industry is also looking at new innovation like agents banking to reach out.
From Equity Bank's perspective, we are using our Equiduka presence all over the country, but especially in northern Uganda, to provide these youth with one, a safe, secure place to put their money, 2, access to financial services if they want to borrow, 3, inclusion into the financial services sector. Agriculture, as we have experienced, is woefully underfunded, and Equity Bank is taking a stand this year and going forward to try and drive agribusiness and drive entrepreneurship in agribusiness and address the challenge of youth unemployment.
Bringing on board development partners is also intended to reduce the industry's exposure to presumed huge agricultural risks that normally keep many lenders away from the sector.
To make it affordable and to bring the interest rates down, part of our approach is to bring in partners to help manage the risk. I mentioned in my presentation that these various partners come in with various forms of risk participation. Sometimes they give guarantees, other times they give matching funds, meaning for every shilling you give, they give a shilling. So in case of loss, you will share the loss.
Equity Bank, with like-minded players in this model, look at mobilizing deposits from the farmers sitting in far-flung areas into the formal financial system, where it can be lent back to them at affordable rates, but at the same time bring on board development partners as counterpart agribusiness financiers.